Johnny, can you hear me?
Good morning. Yep, I can hear
Yes.
you.
All right. We'll
How
see
are you
if,
this morning?
good, good. I have prepared, actually, I have prepared what do you call this? For the ambassador. Wait, let me rename myself here.
Okay.
Oh, what's going on with my video?
Ah, there it is. All right. So I had a couple things I was gonna bring up. Just specific. I think the big one is the Senate is proposing to keep the 100% bonus depreciation in place indefinitely for commercial real estate. So I think that's one of the huge
Mm.
components that they're keeping inside the House of Representatives pass bill, uh, which is great. And I think another one that is what they're is not part of that bill, but they're proposing on exposing uh, corporate 401ks to private equity and allowing certain windows for all of the traditional 401ks in order to participate in private placement.
So that's a good thing,
So
right? It's a
that's
good
going to be a
news.
big one. Oh yeah, yeah, no, that's a huge thing. Just because I think like right now, I forgot how many trillions of dollars are tied up in 401ks that don't have exposure to private equity. So that's one of the things that they're looking to do, reduce those barriers.
Okay.
But yeah,
All right.
yeah. So it's eleven trillion dollars that sits inside of sponsored plans, retirement plans.
Actually, you know what? Let's go live on YouTube. Let's see if we could do Facebook from here. Where is it? Oh yeah, we could only do it on, on the timeline on the personal profile. So we'll just do it in the on YouTube. Let me admit Dr. Joe while we start to actually go live.
Good morning, Dr. Joel. How's it going?
Good morning. Good morning. Doing fine. How you guys doing?
Doing well, doing well. No complaints.
Get some volume here.
Johnny, it's not allowing me to do it on my end. Can you try on your end?
For me?
Yeah, I'll have to make you a host. There you go.
Okay. Recording.
That's better. How you doing, Faye?
Good, good.
Good.
Have you heard about the? Oh, we have some good news for you. The ambassador program.
Mm-mm.
Gonna cover that today.
I haven't heard anything about that.
I posted it in school.
Well, it's 7 o'clock in the morning here.
I'll share. I'll, we'll share it with you guys.
Yeah, Dr. Joe, one of the things that I rolled out is kind of profit sharing, like with new members coming in for the monthly $97 a month cost, they're sharing that 40% with whoever and gives them the invite and brings them into the community. So
Oh,
yeah, so a profit share giving back where 40% of that goes back to whoever invited them to the community.
okay. Great.
Why is my
Yeah.
Zoom jumping? But yeah, how's your week in real estate going?
It's going pretty good. I was a little disappointed, but I was also a little bit relieved that I guess my last seller didn't back out. I mean, backed out. He didn't call me or anything. They asked for a lot of concessions and some of the stuff we'd already completed. And I guess they're seeing like the roof. He's still seeing some stains that his inspector came and pointed out some things that might need to be checked. You know, we'd already replaced a lot of the stuff, most of
Mm-hmm.
the stuff. And I told him that a lot of things had been done, and that I hadn't put a lot of investment into the home and didn't plan on doing anything different than what I'd done. And that's the last I heard from him. So I'm put it back on the market this weekend,
Okay. Okay.
and I'm sort of glad in a way because he wanted to refinance me out in about 2 years, and I'm looking for the long haul. You know, really want to make a long term investment and be the bank for 30 years instead of 2 years. Even though he's bringing a
No,
large down payment, but you know, still a lot more return on my investment if I can finance it for 30 years instead of 2 years.
yep, no, 100%. I agree, and I think that's looking long term with the opportunity that yeah, short term. Those inspections, I've seen them go. Oh man, some of those inspectors, like there's one or two that notorious in the Panama City market where man they're gonna rip you a new one, and like they go extreme, and like you can have I got to the point where I would have another inspector inspect my go-to guy will go in and inspect after all the renovations been done, make sure we got everything, and he was still these guys will still come out with a laundry list of stuff. And a
Yeah,
lot of times for inexperienced buyers, it can spook them. They can be
right,
scared, it's maybe their first time buying a home and they see all these potential red flags in the language that some of these guys use. It just scares the heck out of people. And out of fear, they were like, they'll back out and, won't do anything.
right. Yeah, you paying these guys $400 or $500, and they're gonna give you that 25, 30 page report trying to justify that expense that they just put on you.
Yep, exactly. That's exactly what they do.
And it varies so much. I've had an inspection last year when I bought the property and repaired a lot of the same things that he mentioned. And then he come along and telling this buyer that this. And I'm like, well, that's already done, But like you said, I guess it spooked him. But
Yeah.
that's all good.
No, yeah, exactly. That's what I was gonna say. It happens. It's part of the process.
Yeah, and I'm still looking at two other pre foreclosures. Both of them got uh, less than 3.2% interest rates on them. So, and the sellers so far, one of them has agreed to let us leave the mortgage in her name, and the other guy, we're still waiting to see what kind of concessions we're gonna get from the bank. And see how we're gonna approach him. But we got the
Okay.
foreclosure.
Yeah, no, that's progress. Yeah, no, that's progress. And I think that's the thing. There's no lack of deals when you have different tools that you can leverage. And foreclosures are going up. Like I know a lot of people, especially now, the narrative is shifted to a lot of the war that's going on with Israel and Iran, potentially us getting more involved. But there's a lot of people that's in pain right now.
Yeah, yeah. You're muted, John.
Yeah, yeah, no, I was saying so. I think there's a lot of pain that's going on that quietly that people don't realize the opportunity that sits right before them. A lot of people are inundated with the interest rates and the negative media with transactions slowing down. It's like, but you're looking for your next deal, one deal. You know, if you can do 2 or 3 deals in 1 year, that's a great year.
Yeah,
You know, and so being able to just be consistent and being able, because once, like you said, when you get more, you get all your, a lot of your business from referrals. Just simply people knowing what you're doing and being in the
Yeah.
game active, and you're in a position to take on more assets without even doing a whole lot of marketing.
exactly. I had two patients yesterday, two of my afternoon patients. One of them, she has a group home and she's looking to get another group home. And I was telling her, that one of my previous buyers uh, operates a lot of group homes and she knows them quite well. And she's the first thing she said, I want to be one of your buyers. I want to be one of your buyers. And then we start, I want to be one of your investors. I want to be one of your investors. And then she said, I want a
Nice.
trust. I need you to put me in a trust. I need my house on a trust. So, the more we talked, the more she realized that, she and I could possibly work together. And then another patient is a contractor. And he's been doing it for 30 years. And he also is very interested in doing some work for us. And also, I asked him, was he interested in partnering with us on some deals? He said, yes, by all means. So, just by talking to people and having those conversations, um, it broadens your net.
Yeah. No, it
Mm,
does. And building that
100%.
network. I was talking about that last night in the Alabama Facebook group, just about building relationships and the power of relationships to get to that next level. We need to go set up a booth at one of these doctor conferences down in Orlando, and and talk, because I can imagine there's a lot of physicians that wants to take a step back. I had a conversation with a financial advisor earlier this week, and he was just talking about an anesthesiologist that he knew, coming up on the 60s, but just wanted to get out of the great salary and everything, but it's a grind for the hours that she had to work, and not being able to have control of her time, and wanting to go part-time, and just the level, I guess, staffing, they wouldn't allow her to go part-time, and just like, hey, no, you're here full-time because we need you. There's not anybody that can take your workload. And so just that cycle of not being able to have that freedom and not having the passive income where you can leave, retire, scale back on your own means, that unfortunately there's a lot of people in that position.
Exactly. We see it all the time.
Yeah. Johnny, let's talk about the 96 unit opportunity that's available for, and some updates on that.
Yeah, so it's funny. So I should hear back this morning, talking about networking. That so with that, we refinanced the 84 units of our 96 of that portfolio. So we took 4 to 5 complexes, refinanced those with a local credit union in Alabama. Got a 7% rate for 5 years. First year interest only term, principal interest for the remaining 4 years. But the one thing that kind of set us back a little bit, they reduced our loan a couple weeks before closing from 4.25 million to $4 million. And so, luckily I had the operational money set aside and the money for the renovations that we were finishing up on Bonnie Crest, our 12 unit that we have with a separate loan. And so we had to take that capital to close on the deal. So we're still raising 250,000 right now. One of the things that we worked out really well, that we did convertible debt, where investors come on 3 years, 12% return, and they have the option to convert it to equity at year 3 if they want to. But they're locking in for is just a 12% note return on their money. So that was some cool that we put together for that effort. And yeah, and so we're going to look at repositioning, renovating the last 4 units that are vacant. Out of 96 units, we only have 5 units that are available right now. Those 4 that need to be renovated, and then the one that my contractor crew uses to live in when they come up there to kick off this next phase. So really good opportunity there in Montgomery. We're getting our market rent already, 925 for 2 bedrooms, 825 for 1 bedrooms. And as leases are turning over, so last year coming into the summer, we had about 35. I think it was about 35 units in 2024 that we turned over. So coming into the summer last year is when we leased up the majority of those. So now all of those leases we're bringing up to about 85%. That's the target, to bring them up 85% to market rent, just based off where they were. So about $75 per unit increase in their rent as leases are turned over. And the goal is by year 3, we're going to have all of the complex to market rent, which is going to represent almost a roughly $3 million upside, with increase in rents of almost $192 per unit across the
Wow.
complex. So that's kind of the goal of where we're going and building. And that's why I tell people, like, real estate is the ownership and owning long term, like Dr. Joe was just talking about, with being able to be the bank for 30 years and being able to make
Right.
the money over time. Like, that's where you build wealth. So, because the thing is, once you bring a complex up to a certain level to market rent, and now it's the little things. If you're bringing in 720K of revenue and you increase rents 2% that year, now you're looking at, 1% on 720 million is 7,200. Now 2%, is 14,000. So just by increasing your rents 1%, you're increasing
Yeah.
$7,000 to your bottom line. 2%, you're increasing 14,000 to your bottom line. And as you're already covering your expenses, that goes straight to your pocket. Who couldn't do, so that's an extra $1,100 a month going in your pocket by just keeping up with inflation. And real estate, it paces a little bit above inflation. So that's the thing with, like, once you get a decent portfolio where you can now manage the efficiency and the expenses and being able to see how you increase the income, that, it's the world's your oyster. And now you can take that investment where that capital is coming in and you can reinvest that and buy other investments with your investment
Mm.
capital. But the great conversation I had 3 days ago was with a local credit union here in Virginia that I've been a member of when I moved to Newport News in 2010, Langley Federal Credit Union, and I joined there. And so I just, was on the website going through talking with banks about, because we're about to refinance the 12 unit. Once we renovate those 4 units, we're going to refinance that loan into something long term. And it just blew my mind with where they are. So they're local credit union, but they lend nationally, uh, increasing their commercial real estate portfolio. Very competitive right now. Rates at 6.75 interest rate, and they have up to like a 15-year term, and they'll go up to 75% loan to value and allow you to the difference up to 80% do a line of credit on your portfolio. And even across multiple assets, if they come in with the underlying first lien position, that they'll give you a line of credit for the difference of your equity that you can leverage to continue to grow your portfolio. So that's a great conversation that I had, to the point where we just refinance, but it may be advantageous based depending on their fees to just refinance everything with them and then be able to tap in on a line of credit if you use to continue to grow the assets that the company owns. So, but that's the power of networking, meeting with other commercial lenders. I probably talked to at least 10 commercial lenders the last 2-3 weeks. And it's just understanding what products, because every bank's tolerance, because I've gotten more no's than yes, this possible, no, it's not, but I've gotten more no's than yes. But it's just having multiple conversations and in your knowing who's in your network and what loan products and what they're looking for, where you can find that alignment of their goals. They're looking to grow their commercial real estate portfolio. I'm looking to grow my commercial real estate portfolio as well on the investor side. And you put those two
Right.
together, just like Dr. Joe said, with the lady that he spoke with, like, hey, she can be a partner. She wants to be invest in deals. She wants to, be a buyer and buy the next group home. And so now it's like we're out here and we're just finding alignment with the right people and creating win-win situations across the board.
I'm curious, is that offer specifically just for you or for like the entire, for everything, for all their customers?
Yeah, yeah, no, that's a great question. So he gave an example of how it was a father and son. So the son's an engineer, and they cross collateralized multiple properties in the portfolio to build up to $1 million credit line that he wanted to give his son to do his. He's an engineer and wants to start getting into development, and so he cross collateralized multiple properties that they had with them and gave them $1 million line of credit based off the equity they had and add in the deals.
So, what has been the hindrance? Why are you receiving no's just for our own education and for future knowledge? I mean, what are they basing the no's on? Because I look at you as being, successful and you've got a nice portfolio and you've got a good game plan and a sense of what you're doing. So, what are they basing most of the no's on, John? What's been the hindrance to getting some of these?
Yeah, no, so great question. And it is different. For one lending institution, we're looking at like equipment loans, like to buy multiple HVACs across the complex or a line of credit. One of the big ones was the when you look at the last couple of years of tax revenue, that they look at that. And so one of the big ones with when they see, reduced income and hundreds of thousands of dollars of repairs that happen, it pulls down your tax exposure on top of the depreciation. So for the last 2 years, from the real estate perspective, the property hasn't made any income because we've put over $500,000 in repairs in the property, and with debt service and a bridge loan, higher interest rate that we just refinanced out of. And so from that perspective, a lot of lenders look at your gross, and but then also they look at your net operating income and base off a per certain percentage. So one bank, they look to do like 10% of your gross revenue that you from your tax returns that they'll lend against. And another, it was, hey, we're not looking to, kind of go into commercial real estate that hard. And so they're looking for a different type of businesses that they want to lend out to. But
Mm.
the flip side of that, some of the yeses, whereas like there's quite a few banks out here where you can, if you have a 2-year LLC, that you can go get $50,000 unsecured without having to provide any tax information, or and you project your profits, and as long as you have a decent credit score over 700, that you can get up to $50,000. Whether it's most of it I've seen has been credit card 0% for the first 12 months, and uh,
Hmm.
and then after that, normal credit card interest rates. So there's opportunities for there to get access to capital. Um, but the ones that I have seen, yes, that they're definitely looking more so at the asset, more so than like the tax revenue, tax returns, to make their decision basis off of that. Uh, but
Have
yeah,
the
but
Because
some
small.
that
yeah,
I'm sorry. Go ahead, Faye.
no go ahead. No, I was just gonna say they could have that indicates that they have so much faith in the project that you have, or in the market itself, to offer that kind of interest rate and terms.
yeah, so, but it's been around like the unsecured loans and small business incentives. Like there's some banks that their business plan or business model that they're very aggressive towards working with more
Mm,
small businesses than others. And so it varies bank by bank, just based off of who's in leadership. So great example, like with the one with Langley, they just got a new director of lending, and they're changing their, because before previously they weren't as bullish on commercial real estate, but now they have the guidance to increase their holdings and loans that they're doing for commercial real estate, and they want to become a bigger player in that space. So now, they're looking, to how they can bring in and kind of look at how they can align with investors to provide more loans. And so it just depends on the lending institution and what their priorities are and their risk tolerance, with lending
yeah,
out on certain asset classes. So
Okay.
but I'll
for
say
sure.
you want to focus on like your local credit unions and community banks. They had definitely have the most flexibility.
That was my question. Have you seen that?
Yeah, and I can give you a breakout. I can give you a breakout of like some of the names and stuff, the ones that I've been working with like going and like getting some of those lines of credit, because like some of that stuff that'll be good for you, Dr. Joe. But like, hey, certain projects, especially you got 12 months interest only, you can get into 2 or 3 deals across the year, do the renovations, get it leased out, pay it down, to get into another one. It's free money, 0% interest for those first 12 months. So, and it's not on your personal credit, it's all business credit. And that's some of the things that we're starting to bring more into the community. Not to retire, can bring more have more time to bring in more resources. Met with a CPA this week that's going to be coming in and sharing more about 1031 exchanges, real estate professional designation, and some of the other tax strategies that they work with real estate investors to help build out to kind of save on taxes and doing some of those things. And the business credit is definitely one of those as well too, with building that out, but then also different lenders, like we met with Mitch Messer a couple weeks ago, and just the private lenders that they have that are looking to do more deals and things like that. Just where having all the resources that you need under one roof
Yeah.
and accelerating everything that we all have going on.
Yeah. And also, I just wanted to mention for those that are actually having some excuses, getting started, not having enough time um to study everything and things like that. This is going to be a great opportunity for them to tap into these kind of deals, where they get to partner up with experienced investors with this 96 unit at a very uh low price to get started, and they just they get exposed. They don't have to deal with a high interest rate and things like that, and yeah, they get to learn firsthand as well, because we're giving updates with them on terms of like how the property is performing. So it's not just studying, but they are more so learning, and as well as they're making their money work for them.
Oh, 100%, 100%. And I think that's the
Yeah.
biggest piece is right now, kind of we're in this holding pattern. There was another, I forgot where I got, I think it was Ken McElroy with YouTube, but one of his guests that was coming up at his conference in August with Limitless, that he was sharing that just where we are right now, that if you look across the world right now from an economic perspective, all of the central banks have been drastically reducing their federal funds rate or their baseline interest rate towards zero. I think Switzerland just went to zero. And so one of the things they're projecting is that rates are going to have to go lower. That, for some arguments that, we've been in you would argue we've been in a recession. You could look at the numbers, how they manipulate the numbers and everything, but coming out of COVID and just the level of growth hasn't really been there. When you start weighing in a lot of different variables with inflation, wages, and the economy, that we're going to have to reduce interest rates from where we are right now. And the rest of the world is doing that, but the U.S. is still kind of holding strong where we are right now. And we've seen it, in real estate and just where the impact of mortgages directly impacted transactions and things like that. So the thing is, like, now is the time to build those relationships with your lenders, with your investors, because it's going to be go time here shortly. Just reading an article right now, the Senate's pushing legislation in where they want to start exposing qualified employer plans, so 401ks, to be able to participate in private equity and private real estate transactions. So that's right now on the cusp. The bill is about the big, beautiful bill, as President Trump refers to it. It's about, they want to pass that by 4th of July. It looks like the Senate is right on par with that. 100% bonus depreciation is going to be permanent. So the Senate kept that language in there. I read about that this week.
Right.
But the
Wow.
next bill with exposing qualified retirement plans to private placement. So think about real estate funds for us, syndications, private placement, real estate type of transactions that, when you start looking at qualified plans, I think the number is I think it's $11 trillion sits in qualified retirement accounts that they can't even access until 59 and a half without taking a penalty. So being able to have like windows where they can invest in syndications or real estate funds is going to be huge. And so even just 5% of that number is $550 billion. And you think about it, people are contributing to these qualified plans every pay period. They're contributing,
Right.
and a lot of times they get corporate match on the contribution. So it's money constantly coming into these plans. And so now being able to expose that to your real estate deals and building those relationships is going to be critical. So now's the time to be building your Rolodex, building the brand
Yeah.
on being the go-to person, the individual. And it's going to be a great time to build wealth for not only for you, but for your next generation, because being able to hand over these assets, the businesses that we're building, and hand it over to the next generation. Because with AI, you look at where technology is going right now with nuclear energy is completely came back as a phoenix from the ashes with where the legislation they passed with that, and nuclear energy is going to be directly tied to artificial intelligence now. And with the amount of electricity required to power these data centers, that now they're looking at nuclear energy to be the preferred energy source for that, just because it's cleaner and a lot of benefits that, over the decades that they've refined. So that, AI in regards to like the, technology Amazon's doing right now, replacing people inside warehouses and things like that. So there's going to be a lot of changes. And so the more we can do to set up our own businesses and assets and portfolios to hand off to our next generation, to give them a leg up is like the better off that we're gonna be. So yeah, a lot of things happening for the good for real estate investors right now with legislation and I think in the future too with rates as we come out of 25 and go into 26. So I'm extremely excited to be retired
Yeah.
right now and just really focusing all my time on this and yeah, and being able to
Yeah.
partner and build out the community of like-minded folks. So it's gonna be
Yep.
good.
100%. Yeah, I want to touch on the ambassador program, guys. I'm really excited on that. But before we move on to that, how are you, Christine?
I'm
Christine, can
doing
you hear us?
great. Doing great. Yeah.
What's going on? Updates on your
Yesterday.
side? How was the what's that? 28 units, 5 units that you were
The
working on?
28.
Yeah.
Oh,
How was
oh
it?
yes. The still he's the owner is not coming down on the price yet.
Hmm?
So let it sit a little bit more. Because I think it's priced too high. And yeah, so it's a waiting game right now. Because the price that he has is not negotiable, you know. It's
Mhm.
just way too high. Now, if he comes down, then we may be able to negotiate different things. Maybe he fix this or do that. But it's just too high now. So I'm actually looking elsewhere while we'll let that sit. As my
All
uncle
right.
says, let it bake a little bit more. It needs to bake on the market because it's not done at that price. Um,
Yeah, no, I would say 100%. That's what you do. Like the money's in the follow up. Like time, let's say time heals all wounds, and time makes all real estate transactions. Like more time goes by, life happens to everybody. People pass
Mhm.
away, jobs get lost, relocations happen. Like life just happens. But the money is in the follow up, being top of mind. Keeping that rapport, being communication open where you're touching base and I think I encourage everybody like the deals. It's easier, I would say, on the multifamily side, but you can do it on the single family side. I encourage you. Like keep track of all the deals that you underwrite. Keep a spreadsheet of the deal, the asking price, the notes from the conversation, your CRM that you're gonna have. But now you're essentially building out your CoStar report, where now every deal that you're underwriting, you're seeing in your market and you follow that deal to see if it eventually sells, what's the price that it sold at, and now you can track that. And so now when you go back over 6 months, you've underwrote 30 deals, you can see what's the price per square foot. You can see what are things trading for, what's the price per door, what was the level of renovations. And so now you can see, hey, what was the insurance when you underwrote it and things like that. And now when you go and get your next deal that you underwrite, you already have these parameters that you can underwrite to, and it makes your underwriting go that just much faster. You become an expert on your market. And so I encourage you to make sure you kind of, put that spreadsheet together and track your numbers from your underwriting just so you can keep up and follow up with those.
Great. Excellent idea. Thank you. Mhm.
How long has your deal been on the market, Christine?
It's been what, about 3 weeks now?
Oh,
Three,
okay.
four,
Okay.
yeah, about three, 4 weeks in.
Yeah, it sounds like he's not motivated seller either.
No, he's probably if he has if it's leveraged probably very low. He probably has good rates on it if it's leveraged. I think they've had it for a little while now, about a number of years now. So, and that's the big thing with the a lot of the deals that I'm evaluating. I have to put, I have to borrow money for it. And the money now is not cheap. It's expensive money, and the owners, they have less expensive money, so they're rating their properties based on what they have, and so I have to evaluate it based on what I can do. So I'm turning down
Mm.
a lot of these properties um, that are given, uh, from my agents, And so that's one of the problems. They're there. There are good deals, value added deals. I just
Mhm.
have just have to find them. Yeah,
Yeah, no, and
I
I
think
think
it's
too,
uh
what are you seeing right now for is are you looking at like for is bringing in like 20%, 30% down for these deals, or kind of what's your capital stack look like for the debt that you're gonna bring in and like how much equity you're gonna have to raise?
well, I usually put when I do the evaluation, I usually do 30% down. Now sometimes it's 20. I may even get to 15 if I put guarantee it myself. On the lower units, like 3 and 4 units. Um, but I evaluate for 20 to 30% because I just never know. So I try to be conservative with the numbers.
Yeah, no. So we definitely need to talk because there's ways where you can bring in with the bridge debt where you can get in with
Mhm.
10% down, maybe 15% down, and they're gonna give you 100% of your renovation money. Where you can go in, force appreciation, then refinance them out. Uh,
Okay.
yeah, with those. So, and that allows you now the deal, it changes the parameter of the deal when you're able to bring in a little bit more leverage and execute the business plan. You can bring in less partners, less equity that you need up front. So which means more equity and ownership for you long term. And then you can get into the deal and refinance out with executing the business plan. And so that work in the smaller properties, work really well with that because you can move with speed. And then want those with if it's a good business plan for the local economics of the area, having low occupancy is a benefit because if you got a 20 unit and it's only got 10 units leased, then now you can go in, renovate 10 units in 3, 4 months or less and get those units of the market rent in a short amount of time and then turn over the remaining 10 units. And so you could be in and out with your business plan in less than a year. And so now if you're bringing in, you put 10%, 20% down on those type of deals where you got to bring in 150K, 200,000, but they give you 300,000 for your renovations. Then now you come in, put all that money to work. And if you're giving people a 12% return on their money on 200K, so now you're paying out 24,000 in interest in a year on their money. But you're gonna make, if you got a position where you're making 300,000, 400,000 in appreciation, that's a no brainer. So you got options, with
Yeah.
just how you do your leverage, bringing in more leverage with a bridge loan that you can get in and get out for the right price. So I encourage you to kind of look at that because that allow you potentially to get in more deals where you don't have to
Okay.
raise as much equity.
Yeah, I appreciate that. Appreciate that. Yeah. Thank you.
I might need to look at this big, beautiful bill in a different light. I didn't know all these were hidden. I didn't know these were hidden that would
And
be in my favor.
Joe, they running it up, man. It's the thing is, and like these bills and the IRS and all that, like the tax code is incentivized to tell you what they want you to do. The reason they're doing it is because they want more money to flow and more investment to flow into real estate. So that's why they're doing the commercial. They're doing the 100% bonus depreciation. Looking at opening up all these retirement funds that's tied to Wall Street right now, and you only can invest with your 401k in stocks. They want to expose that, open that up. Now that money can flow into these alternative investments. And so it's open all the way wide up. The floodgates, there's going to be less regulation and more opportunity for innovation and creativity with all this stuff. And we're at the forefront of it because everybody knows that they need to be in real estate. That real estate has made the most millionaires out there, since mankind. And the thing is, most people don't know how to find great deals. They don't know how to package a deal. They don't know how to put the deal together and buy it at the right price. How to put the financing together with equity and debt and mezzanine debt. Where you had like convertible notes and things like that and how to run the deal once you get under contract to manage the contractors, to manage the property managers, to go through it. So that whole process, they need us as investors to make their money work because if not, they're
Right.
gonna just be tied to the roller coaster of the stock market. And so I think the more that we get comfortable with having those conversations and knowledgeable about this and it's like it's a no brainer. But the thing is, like, you got to control the taxes. Like, I look, some of the meetings I was in this week with conversions from taking 401k um, funds and rolling into Roth conversions and being able to invest in certain type of gas and oil exploration funds, and how you could divert taxes and take qualified plans or roll them into non-qualified plans and move that money around to take taxes now, where even if you have two spouses, with some of the strategies that you have with your tax strategies on how with two spouses where they can start converting some of that income out of their 401k and deferring it to Roth. Whereas that now, when you lose, when one passes away, that now you're going to go from a two-person household, and now you look at the tax bracket and how taxes, you're going to lose a lot of that coverage of being a married income. Now that threshold on the tax credits and the tax rate changes when it goes to a single person household, that you lose a lot of that. So now more of your income is taxable. And so just looking at conversion, things like that from a strategy perspective with moving money to a Roth, and then some of the investments you can invest with your Roth where the money's going tax-free and deferred, that that you got to be thinking long term and having a strategy out here, because if you don't have a plan, you're gonna be planning to fail, and you're gonna be paying a lot more in taxes, which is the number one erosion of wealth, is being having to pay taxes. And so not having a real strategy and tax plan hurts a lot of people.
That's true.
Well, I definitely vote for that part of it.
Yeah, then they would say there's no such thing as a free lunch. So there's always pros and cons with it. And I think the biggest thing is just being able to see how we can leverage it and make the best out of it.
Yeah, and that's how
And what
rich
and
people make money.
yeah, and I think one of the huge advocates with the House Armed Service Committee is the senator from Alabama that's really behind pushing a lot of that. So when you look at a lot of these changes that's happening, that you're gonna probably see some things trickling into the great state of Alabama as well too. So yeah, follow the money.
Yep.
Yep.
Is that
Yep.
Britt or Tuberville?
No, it wasn't Tuberville. The other
Britt.
senator that
Britt, Katie Britt. Yeah.
and so yeah, you just got to keep aligning and information. But that's where the information is out there. It's like, what are we gonna do with it? Like, we can all access the information, but it's like, once we get it, it's like, okay, what are the actions we're gonna take? How are we gonna modify our decisions? And what are the new decisions that we're gonna start making to pick up certain assets to kind of pivot and normalize to the new environment and the new reality. Because the thing is, if you can't be making decisions off 2022 information, 2021, and having strategies for 2021, 2022, it's like everything's evolved and changed post COVID. And if you still have old, stale strategies, you're gonna get left behind.
Yeah. True.
Hey,
That's
Johnny, where do you get your information from? I didn't hear about that bonus depreciation. Are you listening to like CNN and stuff? Where do you mostly get your?
Yeah, so The Economist is one that I follow routinely.
Okay.
But most of the time it's my and I'll post it in the school community. It's my financial advisor GPT that I created. So I created my own chat GPT, or my own GPT, that I fed certain information, and I get it to go out and give me a daily dump of like certain things for the certain bills, and what does that mean to me as a real estate investor. And
Wow.
going through
Okay.
it. So it'll compile all those things that I really should be focusing on from that perspective. And it gives you the sources where it pulls it from. But I'll upload that in school and share my because I think I can set it up and have a link where you can just go to it. You can use it as well too.
Wow. That AI is something else.
Yes, it
Okay.
is. It is.
Yeah. It's going to be AI is going to be the new personal computer when I was growing up. It's something you just cannot not have. Um, and just have to adapt to it.
No,
To
100%.
yeah.
And I think with all these changes that's happening, being able to leverage AI, it's going to allow you to scale, become more efficient, and with everything that you're doing. So like this is the time in this nascent stage to embrace it, and it's going to give you a competitive advantage. And you see all like the Amazons, Google, Microsoft, like they're all rushing trying to adopt and leverage it to come be first to market with a lot of this stuff, just because it's game changing. It's going to be game changing.
Yes.
Cool. But I got like 3 or 4 minutes before I gotta shoot down the street for a 9 o'clock appointment. But yeah, let's talk about the ambassador program.
Yeah, I wanted to share my screen, but anyway, well, it's a simple one,
Yeah,
guys.
go ahead, and I'm gonna make you the host.
Okay, it's so I'll be preparing something that you guys, read and things like that. But I want to just quickly get an overview for you guys and what it is actually. So basically, this is open for first members of REI Genius, such as you guys. We wanna expand more in terms of like, so it's actually three ways. For one, we get to get on our mission to help more people get into real estate. Number two, if they are needing more funds, things like that, this is definitely going to give them as a kickstart in terms of like you're able to help someone, but also it's helping you because you're earning on the back end too. So as long as they're a part of the program, it's a subscription. You'll be I'll give you guys the quick breakdown of it. So the number of people referred, and then the monthly income that you're going to get, and so the annual recurring that you guys are going to get. So if you take a look at it, if you have say 10 people, that's actually more than probably a payment for your car mortgage or whatnot already. So yeah, first requirement basically is you got to be in real estate. So that one, because we're going to be helping give you guys a boost as well in terms of credibility online. Second, for you to be able to like share it with your group or anyone that you are connected with. You're active on social media, so we'll be giving the graphics and things like that, and then tag you on it so you don't have to post and do it yourself. I know you guys are busy too, so we'll just tag you on, and then you can just simply comment your personal referral link, which will be teaching you on how you can grab it in school so that you don't have to worry about it. When they sign up using your personal link or your affiliate link, automatically it goes to your bank account, or automatically it goes to as your referral counted in school. Okay, and I'll show you as well, guys, on how you can add your bank account in school so that it's gonna go directly to to your account. So yeah, that's basically an overview of it. And if you guys would agree, would be posting as well in socials, that you guys are ambassadors of REI Genius to give you a lift as well too. When people see, oh, that's he is an ambassador, she's an ambassador for an REI Genius community, the Financial Freedom Network. So kind of added credibility right there. So yeah, questions? That's a quick one, but I'll show and share with you guys the everything that's in here, so that you have a quick guide of it. But basically, the overview is that you get the link on school. You have to be a member, of course, and then second, on adding your bank account in there, and then start sharing, start engaging, and that's it. Start earning, and then we start
Yeah, and
helping
I
more
think this.
people.
Yep, and I think that's the big thing with. I really like the ability with school with setting up the affiliate, because that was one of the things like, okay, how do I share the growth of the community now going into this full time with everybody that's a contributor and part of the community. So that was one of the things I really liked about the school platform, that your affiliate link is generated automatically. You can go right there in your profile. They take care of all the back office with the monthly payments, that it goes directly to the affiliates, because this is one of the things that I'm really passionate about with growing this community, but at the same time allowing everybody else to participate and grow with me and grow with REI Genius as we impact more people. Because I view this as a movement with what we're doing with financial literacy and the Financial Freedom Network and helping people take back control of their finances. And I think everybody that makes that decision to invest in themselves, that want to make sure that we have everybody right there participating, being a part of it, we're sharing it. And yeah, so I think it's a really good setup, and let's go. I'm excited. I'm excited to be
Yes.
here. This time it's a lot of great things that's happening in the market and poised for a lot of great things and wealth to be made.
So
Yeah.
does this membership give them full access to the community and all the assets that you use for teaching, Johnny? Everything that's in the REI Genius package that's included with this membership.
So yep. So great question. So it's not everything. So it's not my multifamily mastery kind of with the focus in on like with the group coaching for that, and the raising capital portion of that is separate. And it doesn't include like me building out the financial plan, the estate planning, those pieces. So that's kind of the reserved at my inner circle level where we're getting your personal financial plan, getting your estate plan set up, those things, as well as the raising capital blueprint and everything, where we kind of go in and help you build out your social media, your LinkedIn presence, and everything for your system with raising money and how to do deals with everything with the in-person events as well too. So all that's kind of my inner circle, but this is a lot of the academics, everything that's happening in school, all the webinars, the trainings that we're doing. We're having different individuals coming in with the different strategies, with taxes, estate planning, the wealth building. We're looking to bring in some stocks and the option trading as well too. That's going to be a new one that's going to come in later this year, that we're going to be doing. So, but yeah, everything in the community, and access to me and Faith as well. We're like the $1,000,000 Coffee. This session here is going to be exclusive to school, as
He froze up.
Is it me?
No,
Oh,
it's
Johnny.
Johnny.
Yeah, the
Yeah, so it's gonna be exclusive in school, and really the main goal is, this idea came up because we are kind of paying it forward for all the support that we're getting and everything, and then REI, the growth of REI Genius, and then how we've seen people who has delivered the results and things like that, and especially right now with every, as what we've talked about, where everything, where the market currently is, and and then people that are having some um issues or excuses, so to speak, when it comes to, like, I don't know where to get started or things like that. Now you can, you have no more excuses. We got access to capital. We got access to now, just by sharing the word, you can start compiling or, like, pulling together some funds on your end. You're able to help that person get started on something, and and then you start also earning. As long as they are subscribed in the program, you get paid on a monthly. So we got one person, two, three, four, five, 10 that's already paying, or that's already adding up, to that you can use to either, you do it for a down payment or your car payment or whatever you want to do with it. And yeah, so that's completely, say, passive. You just need to share it on socials or comment or engage on socials. Initially we thought we'll be sharing with you like the graphics and things like that, and we said, probably not do that, so we'll just tag you on it. So tagging you on social media, you just need to comment on it, react, and then share it, and then post in the comments your link. So that way you don't have to, lesser effort on your end too. And what else? And yeah, we will do some posts as well, and then have your badge as an ambassador, so that people now can recognize you as REI Genius ambassador. And then if there is anything on our side that we can help you with as well, we'll help you. Just let us know.
Great.
Yes, awesome. All right. I see why Johnny is actually all right. He rejoined.
Yeah,
It is
my
like that.
internet crapped out, but I'm rolling now. So great session.
Yeah, it's asking you to go out. It's telling you it's time to go. So yeah, that's it, guys. I'll share this with you, and if there is anything that you need help with, just message me on school or anywhere in my email too. And Christine, I'm excited for the episode that's gonna go out, the interview that I had with you.
Oh,
I'll tag you on that
okay.
too. All right. Well, thank you
Thank
so
you for
much,
that opportunity.
guys.
Thank you.
Appreciate you. My favorite doctor, Dr. Joe.
Have
Thank
a good
you.
one, everybody.
All right. Thank
Bye.
you.
Have a great day, everyone.
You
Thanks,
too.
Christine.
Thank you. Thank you.